At the dawn of the recession in 2008, Raj Rajaratnam, the founder of the hedge fund Galleon Group, had $7 billion under its management. It would only be a year later, though, that his empire would come crashing down as the FBI raided his offices and he would face 20 years in federal prison. Raj started out as a loan officer for JP Morgan before making the jump to investment banking in 1985. He was quite successful, becoming president of the research division of the firm a few years later. The company he worked for, Needham & Co., asked him to start a hedge fund, which he did, and eventually purchased for himself. He renamed the fund Galleon Group. His fund boasted a net annualized return of 22%, about triple the average of the S&P 500's return. Authorities became suspicious of some of Raj's trades. It was as if Galleon Group had prior knowledge of market events before they were even occurring. This suspicion prompted the FBI and SEC to begin wiretapping the Galleon Group's phone calls. At the end of their 16-month investigation, they had over 18,000 wiretap conversations that involved over 550 people. Raj was mainly accused of profiting from insider information that came from three people: Robert Moffat, a senior IBM executive; Anil Kumar, a senior executive at the consulting firm McKinsey & Co., and Rajiv Goel, an executive at Intel. What made this even more interesting to the authorities was that Raj, Anil Kumar, and Rajiv Goel were all classmates at Wharton Business School. They were all arrested. The federal prosecutors reported that the total profits of the scheme were around $60 million. Anil Kumar was the first one to fold. He took a plea deal and became the prosecution's star witness against all the others. Fun fact, he actually appointed the same lawyer that Martha Stewart did in her insider trading case. Rajiv Goel later collaborated with prosecutors as well. Raj was actually approached by the feds before his arrest and was requested to wear a wire while speaking to his co-conspirators, but he refused. Raj never colluded with any of the federal investigators. In one example, Anil Kumar testified in court about giving Raj tips on insider info about AMD, that a company based in the UAE was to make a substantial investment in the company. Raj bought a ton of shares of AMD before the announcement was made public. Anil also testified against his former friend and mentor, Rajat Gupta, for passing confidential information about Goldman Sachs to our man Raj, the Galleon Group founder. Gupta was a former board member of Goldman and allegedly told our man Raj that Warren Buffett's Berkshire Hathaway was in the process of making a $5 billion purchase of Goldman Sachs before the announcement went public. Gupta stood to gain because he was next in line to be the chairman of Galleon Group. The total payments that Anil received from Raj were only about $2 million. Although it sounds like a lot of money, this was nothing compared to the value of his total assets. It brings his motives into question, as what he stood to gain was very little compared to the risk he was taking. Robert Moffat, the IBM executive, served 6 months. Rajat Gupta had his own separate case and was sentenced to 2 years. Anil and Rajiv, who testified against their former friends, each got away with 2 years of probation. Our man Raj of the hedge fund, Galleon Group, was eventually sentenced to 11 years in federal prison, which was and still is the longest sentence ever handed down to someone for insider trading. Needless to say, he closed his hedge fund shortly after. He served 7.5 years of that sentence. Thanks for watching, guys, and if you enjoyed watching this, which I hope you did, I'm gonna have a lot more of these stories coming every week. Comment any suggestions for me down below. If there's any specific stories you guys want me to cover, then I'll be happy to do so, and thanks.